pleasant day to you, ladies and gentlemen. I'm going to talk to you about credit cards once again. I have a part 1 video on this topic, and the reason for this part 2 is because I still have a bit more information to share that I believe is important. The credit card companies have stepped up their game of offering us perks to get us to spend more. They have become extremely aggressive, trying to outdo each other. We are being pushed to spend more than we are already spending, and many people are falling for this trap. They have become highly competitive, trying to capture our attention and heavily persuading us to choose their products. I visited the website of a popular bank to see what type of credit card offers they have. Well, I found a total of 26 card offers. Yes, 26 different credit cards are being offered to us. According to Google, Visa spent approximately $1.3 billion, and Mastercard, they spent just shy of $100 million marketing to us in the past year. And collectively, all the credit card companies have spent approximately $3 to $4 billion yearly just marketing to us. That is very heavy and should really tell us something. Recent data shows that consumers owe over $1.3 trillion in credit card debt. Recently, I called my credit card company to discuss an item on my bill, but they were more interested in finding out my current income than for the reason for my call. I eventually asked them, "Why are you asking for my income when I already have a card with you?" Are you ready for the answer? Well, here we go. They said, "Because we would like to increase your credit limit." I did not ask for this, and they did not ask for any proof of my income either. All they wanted was for me to tell them how much I make, and they would increase my limit. Additionally, an offer I got in my email was, spend $1,000 and get $20 cash, spend $1,500 and get $30 cash, or spend $2,000 and get $40 cash. But I must spend this money within 22 days. So in other words, I must put myself into more debt quickly by their deadline date. And if I don't do that, they are going to take their offer back. Wow, I guess that would be my loss. They certainly know how to invoke emotions. We, the consumers, must learn to make financial decisions without emotions. Decisions made based on our emotions open the door for exploitation. The reason they hammer us with aggressive marketing is because it is working. We are falling for it. Our goal as the consumer should be to get out of this vicious cycle of continuously using credit cards. It's also known as borrowing money, thus driving ourselves deeper and deeper into debt. And by the way, that same credit card was offering me $5 cash if I use the card to set up automatic bill pay for up to 10 of my bills every month. Of course, I won't qualify for the cash unless I use the card to pay the bills for at least 2 consecutive months. If I choose to use this card to pay my bills every month and not pay the balance in full, this will result in me paying more for my bills because I'm going to be paying interest on that card. So here are a few suggested additional things that we can do to avoid the pitfall called credit card debt, which, by the way, will prevent us from being able to purchase a home. Number 1, if they increase your credit limit without you asking, call them and tell them to lower it back to where it was. Number 2, if you are too deep into debt, contact a certified credit counselor. This option is only if you don't see where you can get out on your own, or you have already exercised the other options without success, because they do charge a fee. There are, however, credit counseling agencies that are nonprofits, and those would be a better choice. Number 3, talk to the credit card companies. Explain your situation and see if they can work something out with you. Some do have the options available, but you won't know unless you ask. It is always best to try to reduce your debt on your own because third parties will charge fees unless they are nonprofits. Number 4, Try to change your financial behavior. Stop spending until the debt is gone. Then practice controlled and responsible spending by asking yourself the questions in my part 1 video. Make sure you have the funds to pay the balance in full, or at least have 2 to 3 payments when the bill comes. Also, don't buy anything else on the card until the previous balance is down to 0. Become a cautious spender. You can do this. Number 5, don't take rewards cards that offer travel miles and hotel stays if you do not travel often. You will be paying higher interest rates and yearly fees for nothing. Number 6, remember to pay off those credit card balances starting with the smallest amount and work your way up as mentioned in the part 1 video. Number 7, others have recommended consolidating your debts. But I say try not to consolidate the credit card debts. All you are doing is lumping them into one big debt and at a possible higher interest rate, putting you right back on the hamster wheel. Using another debt to pay off your current debt means that you still have the debt. If you choose this route, read all the fine prints before signing. Number 8, open a separate no fee, no minimum checking account for shopping. Here's the idea. Only keep a specific amount in that account. Get a debit card on that account and make purchases with that debit card. However, do not activate overdraft protection and do not link that account with any of your other accounts that you have. Number 9, I see lots of videos encouraging consumers to refinance and pull the equity out of their homes to pay off their credit card debts. That is, of course, if we already own a home. But I strongly discourage that action unless there's absolutely no other way and you have a clear understanding of what you are doing. Keep in mind that if you choose this option, the debt is not gone. It is now tied up into your house because all you did was transfer it and put your home at risk. You will also have to pay closing costs, possibly a commission. You'll also end up with a higher interest rate depending on the going rate at the time of your refinance. Your principal balance is going to increase, so you might have a larger mortgage payment, and also your insurance premium could potentially increase. So the question is, which would you rather lose, your credit cards or your home? I sure hope that you find this information helpful. I thank you for watching and all the best.